This was a good block and tackle quarter. It showed progression on the broader financial metrics of reducing costs and getting to their target this year of $8 billion of free cash flow. So there's financial discipline at Disney, but of course, as you've noted, there's a lot of moving parts. And ultimately, what investors would like to see is growth that can get through this transition of linear networks declining, streaming businesses increasing, but how profitable will they be?
How profitable do you think they're going to be?
It's going to take time. Streaming is a very competitive business. Unlike other subscriber businesses of the past, like cable TV or even wireless, you have very high churn. Disney at least is disciplined on the programming and content spending, which has come down significantly, and in many cases, pivoting their spend to sports from general entertainment. But I think the jury is still out there, and what we didn't see in the release today is, the magic is there, but what investors want to see is how is Disney executing on a technology platform, not just US or global? Is there an AI component to their technology plans? And you know what? Netflix is doing that, and they're there. So if you're going to be great at streaming, you have to be like Netflix.
Hey, Ken, I guess, one of the challenges for the Walt Disney Company and pretty much most of the traditional media companies is just kind of that linear TV, broadcast, cable television business. And Disney reported, weaker results. Sales fell about 8% in the quarter. How do you think these traditional media companies kind of manage the longer term decline of those businesses?
So what we're seeing, and it's a great question, and if we were all in business class, this would be a classic where you have a mature to declining business, but it's still throwing off lots of cash, trying to reinvest that in new growing businesses that hopefully have good business models. And I think what we're seeing is because of digitalization of advertising, that shift from linear or legacy networks broadcast to streaming is happening much faster. So that's a problem.
Paul, you are a recovering media investment banker,
Yes.
right? I mean, I've heard about the death of linear forever.
Yeah.
So, I mean, what do you think makes this time different when you look at the outside?
What makes this time different is simply the revenue stream, which really supported television for the last 30, 40 years, was subscribers from cable television and satellite TV. And that subscription revenue offset the decline in advertising revenue as advertising revenue went to different places. First cable and then did digital. Now that subscriber revenue is going away because of the cord cutting. So now you really have nothing to lean against. And that's what I guess most of the media companies are kind of dealing with their linear networks. So Ken, I mean, if you're the Walt Disney Company here, one of the things is the studio. I mean, the Walt Disney Film Studio dominated Hollywood for the last 15, 20 years, thanks to the Star Wars and the Marvel and all this, the Pixars and all that kind of stuff. The studio kind of stumbled over the last 4 or 5 years, and maybe people are getting a little bit tired of some of the titles and the franchises.
But you just need to be good. I'll go see it. Just be good.
Exactly. Okay, well, there you go. So what do you think the strategy is there, Ken?
So we need to see better performance, not only from Disney, but also the industry. And really, when you look at global box office, ex-China, it's running 20-25% below where we were pre-pandemic levels.
Yep.
Additionally, when you look at movies, you always go to the sequels, the ones that can bring in large audiences, but sometimes they're flops and they're very costly. So I think theatrical, which for Disney feeds not only into film, but it feeds into the genre of their parks. It's a big deal. And I think when we look at what Bob Iger wants to do there, he has talented people now running those businesses. But even if you got a big hit, you look at Paramount with Top Gun Maverick over a year ago, it has not that much impact on the stock or what analysts think in terms of the fundamental outlook of a company. So it's important, but it's kind of stirs the pot, but it's really, let's not forget, we haven't had a conversation today. Why we're many investors are in Disney is for experience or for the parks, and having these durable businesses where they have less competition versus some of the problems they have in entertainment, whether it be film or be streaming. So let's not forget about the parks because that's really the core of their stability.